This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on September 16th, 2011. Our time is 8:44 in the morning Mountain, 10:44 Eastern. Our radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, here's an example. We're on early in Edmonton. When we went to tape the show last week, we were unaware of that, so we could not tell you. So we're on early, and for some people, they may miss the show. Well, not exactly, because you can go to Harold's website, HESradio.com, and hear all the shows archived there. So if you ever miss a radio show, go to Harold's website, HESradio.com, and listen to the archive shows. It was a very interesting week. A lot of concerns about sovereign debt, concerns about Greece and Italy. They needed more money, a bailout. They were wondering where the money was going to come from. And then all of a sudden, there were central banks from around the world who ponied up the money, printed the money, and once again saved the day. But Harold, these are all short-term fixes. They're not a long-term solution to the problems that many countries around the world are having. In fact, it was interesting to see this week the IMF, Christine Lagarde, coming out and saying the world economy is in a dangerous new phase. And I think most people realize they're just basically trying to hold things back for the short term and hope things get better in the long term. But we know that is definitely not the case.
Exactly, Randy. Hoping just doesn't get the job done. The fact is that they've been saying this and doing these short-term fixes for since 2008, and the fact is that nothing is working. So the fact is that we're in this domino effect that just keeps on getting worse and worse and worse, and it's worldwide. You know, the thing is that if you read the news every day, it's depressing. But the fact is that you do have to keep up on what's happening, because this is a global economy at this point, and you've got several parts of the world that are in very big trouble. Obviously, we know what's happening in Europe with the sovereign debt situation. It's an unbelievable time and situation where you have countries that are literally going bankrupt. So the fact is that this is going to continue because they haven't come up with a solution to what the problem is. All they're doing is buying time at this point. We saw a very volatile market this week, and every week we say the same thing. Be prepared for tremendous volatility in these markets, and that's what we saw. Gold broke 1,800, traded basically down to 1790. However, it's just trading in a range. There's so many things going on at this point that are so confusing for the market that the fact is that gold could drop a little bit further. There's very heavy support in gold at $17.25, and there's very heavy support in silver at $38. Actually, silver's held in there very strong. We're still trading above the $40 level. But again, these markets will remain volatile as countries and the Federal Reserve and situations like that continue to wreak havoc on this market. And what basically happened this week is that you saw the U.S. dollar rally. And how is it possible that the U.S. dollar is actually going up? It's because the currencies in Europe are in such big trouble. You're getting intervention from the Swiss government that's bringing down the price of the Swiss franc. You've got the euro basically in trouble, and that strengthened the U.S. dollar. And as Randy was saying at the beginning of the show, they helped bail out Greece and Italy by basically using U.S. dollars. So you saw the U.S. dollar basically last week, or about a week and a half down at about 73.5 cents, and now it's sitting 3 cents higher, which is why you saw the price of gold and silver back off. However, it could have backed off an awful lot more than that, because a 3-cent move in the dollar, got people excited, and they sold off the metals. As we're taping the show right now on Friday, gold is trading right at around $17.95. So we're basically $100 off the high of the gold market, which we could see in 1 or 2 days. The silver market basically, is trading in a range from around 40 to 44. And again, we didn't get the prices and the moves that I wanted to see, a couple closes above 44.30. But basically, again, silver's trading in a range at this point because there's so many confusing situations happening. However, what we need to concentrate on is why are we in the hard asset market? Why are we buying gold and silver, and why are we holding it physically? And the reason for that is exactly what's going on at this point. Total confusion in the world financial markets, and the biggest reason, which is inflation. There is absolutely no doubt that we have high inflation and it will continue to get stronger and stronger, and the governments are not going to deal, especially the U.S. government, is not going to really deal with inflation at this point because they have so many other situations on their plate that are more severe in their interpretation, that they are dealing with, obviously, the unemployment situation in the United States, the housing situation, and all the other problems that the U.S. has at this particular point. So again, inflation is the major reason why we need to be in the gold and silver and diamond market. And let's not lose sight of that, because that is what will move the gold and silver market to the levels that we anticipate. You know, we've made strong predictions in the prices of gold and silver, and they've been very accurate over the last few years. But the predictions that are coming out by some very brilliant people, guys like Eric Sprott, for example, came out with a report, and it's in the newsletter this week, that he thinks the silver is going to go ballistic. That is the trade of the decade, and it could literally hit $1,200. In fact, he's expecting a move in silver that defies description and expects it's going to happen fairly quickly. James Turk is talking about silver and gold going to levels that nobody dreamed possible. People are talking about $10,000 gold. Now, again, how do you predict a price like $10,000 gold when gold has never, ever been anywhere close to that? You look at what the prices are now, you look at what the prices are back in 1980 when we had inflation, and then you adjust the prices using inflation, and that will give you a barometer as to where the potential of this market could go. But there is going to be a time that the markets are going to go absolutely ballistic. That's why I'm saying that you need to be in the physical precious metals market. If you're heavily leveraging your gold and silver positions, or if you're in futures markets or Forex or anything like that, it's something that, again, I've recommended that you not do ever since we started the show. When you get into the heavy leverage markets, you're going to get knocked out. We've seen 8 or 9 situations in the last 10 years where the price of gold and silver has basically plummeted and then come all the way back up. We don't want that to happen to any of the listeners to the show. So, again, the most important thing is that you do not heavily leverage your gold and silver positions. You know, we're all bullish on the market, and this is an opportunity, you know, for a lot of people to make an awful lot of money. The reason that we're recommending gold, silver, and diamonds is to hedge against inflation. The cost of living is going to go up substantially with higher oil prices and higher food prices, and gold and silver and diamonds, as they move higher and higher, will offset the high price of inflation. People that don't do that, they're sitting in the stock markets, as an example, don't have that same luxury. And as the stock markets around the world continue to fall and fall and fall, and that will happen, you're going to find that not only inflation eats up all your money, but then you don't have anything to back it up because you're in paper assets. That's why we're saying to be in gold and silver at this particular point, because inflation, as it continues to rear its ugly head, and will get into the double digits like it did in 79 and 80, if you don't have gold and silver, you have nothing to fight against inflation. So with all the confusing situations happening in the world right now and everything, and when you read the newsletter, it's a phenomenal newsletter again this week. I mean, Randy does such a fantastic job of getting the information that you need to make an intelligent business decision. But the fact is that there's a lot of situations going on that are very unclear, and again, we really need to focus on what is the main reason why we're in the investments that we're in right now. And the major reason to me is that inflation is number one and a weak U.S. dollar is number two. See, the thing is that the consumer moves the economy. And the consumer is not buying. The consumer is not buying anything. The consumer is not taking out credit. The consumer, for the first time in decades, is saving money because they can barely get by. In the newsletter this week, the poverty level in the United States is on the rise, and it's frightening. They say that there's 45 million children that are in poverty in the United States. This is an unbelievable statistic, and they're saying 1 out of every 6 Americans are in poverty right now. I mean, these numbers are depression type of numbers, and it's going to continue to get worse because the real estate market has always been the area where people got rich. And once the real estate market took all their money away, there's not a lot of rich people in real estate right now. In fact, the people in the United States that were massive builders are all basically broke at this point here because they didn't see this thing coming. And again, when you're heavily leveraged like most real estate is, it's just an unbelievable situation. So what we're looking at right now, again, so I don't want to confuse anybody, let's just concentrate on why we're in the investments right now. There's nothing that you and I can do that's going to change the government's decision. They're in a situation of total desperation. They're doing things that only a desperate person would do. And again, we don't need to do that. We've been doing the show for 10 years now. Most of the listeners to our radio show and clients of ours are in the right markets right now. So the fact is that when the stock markets fall and all these situations are coming up, the fact is that we're hedged. We've got gold, we've got silver, and we've got diamonds. And as long as you've got those three assets, you're going to do fine. Now, to do better, my suggestion is to get out of the stock markets. I know that sounds a bit strong, but the fact is that there's huge potential for a gigantic drop in stocks again. And I would much rather see us sitting in cash with no risk as opposed to risking all the money that you have in the stock market. Even in your retirement funds, if you don't have your retirements sitting in physical gold and silver, it should be sitting in cash at this particular point because the risk out there is absolutely tremendous. And we've seen it happen back in 1999, 2000, when the Dow plummeted and the NASDAQ market fell from 5,000 down to 1,000, and everybody lost their money in the dot-com companies. Built it back up again. Then came 2008 when the market plummeted from 14,000 Dow down to 6,500. And again, took everybody's money and retirement money away. Now we built it back up to around the 12,000 level. And now we're in danger again of the same scenario happening. It just gets too frustrating and too difficult to keep on rebuilding and rebuilding and rebuilding. Now is not the time to look to make a ton of money and speculate in the markets. Now is the time to be ultra-conservative and to basically preserve our capital. You need gold, silver, and diamonds to hedge against inflation, but you don't need to make money in the stock market when there's very little potential for that to happen at this particular point. So again, strongest recommendation, keep your money in gold, silver, and diamonds, a percentage of it, maybe 25 to 30% of your money, and the rest of it should be sitting in cash at this particular point. If you can pay it down your mortgage, that would be a smart thing too. Because again, my gut feeling is that 2012 is going to be the most dangerous year that we have ever seen. And if we're not prepared for that, it's going to be very difficult to catch up. So again, if silver at below the $40 level, I think it's a tremendous buy. I believe silver is going to be $150 to $200 metal. I think gold is going to be a $4,000 to $5,000 metal or higher. So again, I think both of those markets are at great prices right now. The other situation that's coming up this month in September, you know that the U.S. government has not had a budget for 2 years now. And if they don't get a budget together, the military doesn't get paid and the government workers don't get paid and the government shuts down. On top of that, the U.S. government owns $15 trillion in debts. This is not a good situation. And again, the markets are not, and the economy is not getting any better. They're going to have to put money back into the economy with probably QE3, and that's going to drop the value of the U.S. dollar again. So again, all these things that are happening, all the money that's being given to Europe and to Europe at this particular point, Greece and Italy, is all printed money. That reduces the value of the dollar, and the currency that they're printing is the U.S. dollar. So again, let's be very, very cautious. The other thing that's going to happen this month is a potential horrific situation in the Middle East, and that's something that certainly warrants our attention because and this is not necessarily between Israel and Iran at this point, even though that is a concern that did come up again this week. The major concern, believe it or not, is between Israel, Turkey, and Egypt. So there's situations happening this week that are very, very concerning this month, one being the situation I just brought up with the Middle East and the other situation with the U.S. budget. And if that doesn't get taken care of, this situation could get dire. So please, the most important thing at this point here is preservation of capital. Be in gold, be in silver, be in diamonds that will hedge against inflation and give you money to fight against inflation. If you're sitting in stocks at this point here, I'm not. We've been out of the market for a long, long time, and now is not the time to have your money sitting in paper assets. Now is the time to be very smart, very conservative, and as Canadians, that's not an unusual situation for us. We are frugal, we watch our money, we work hard for our money, and we are conservative in nature. So again, I think we're in great shape. That's why Canada is not in as bad a shape as Europe and the United States, because we remain conservative and our banks did extremely well. So again, the only unfortunate thing is that the U.S. economy is the biggest economy in the world, and it affects everything, and obviously Canada and the United States are partners. So again, be prepared. This year is going to be this year, but next next year could be the most extreme year we've ever seen, and I just want to make sure that everybody's prepared and loaded for what's going to happen so we can take advantage and make some money during a very difficult time.
The telephone number to invest in precious metals, 1-866